Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about energy. Lots of oil, uranium. It's all mixed in here. It's mainly from Twitter, so it's a lot of information from Twitter and articles that I've been reading. So I want to share with you a lot of different things about energy in general. It could be anything. I put lithium in here. That's a battery storage for energy. It's all energy type driven information. So let's dive in. Let's see what I've got, and we'll get in here. So it says, while I think the world is already pricing in that there'll be an inability to take in a serious amount of Russian oil in the Western Hemisphere, I don't think we've priced in everything yet. Goldman Sachs says oil could reach 150 in the next 3 months. And it says a tight market. Oil buyers are rushing to secure supplies as soon as possible. And you can see this thing really start to ramp up at the end of 2022. So, sorry, that's today. Sorry, it's today, but it's the 6 month contract, 3 month contract, and the 1 month is starting to really come on up. And they think in 6 months that we could see basically a squeeze. And that's exactly what I'm thinking as well, is that summer and winter, Q4 of 2022, we are going to get in a very tight oil market and natural gas market. And we're going to be shipping this stuff all around as well, especially from what I have read is liquefied natural gas is also going to be shipped from the United States over to Europe. There's going to be terminals that are going to be built. We're going to have more tankers. It's going to be very tight. David Hunter is still sticking with his call. We likely saw the peak in oil for this cycle when it spiked to 130 earlier this month on Russian sanctions. I expect it to trade down into the 60s in coming months and ultimately into the 30s or lower during next year's bust. Lower oil will help spur the reversal of tightening narrative. So that's what his opinion is. I threw it in there. He is sticking to his guns, even though the market and everyone else is counter to this move. It says U.S. and allies discuss additional release from oil reserves. This is interesting. Following Putin's invasion of Ukraine, the member countries of the governing board of the IEA agreed to release 60 million barrels of oil from their emergency reserves to send a unified and strong message to global oil markets that there will be no shortfall in supplies as a result of the Russian invasion of Ukraine. Well, I don't see how that reverses anything. It's actually depleting our worldwide inventory of oil, making the situation all that more dire as they are basically admitting that we have a huge problem and that they're going to release oil from their strategic reserves or their reserves and lowering the inventory levels worldwide. It says Saudi Arabia considers ditching the dollar for Chinese oil sales. The status of the US dollar as the reserve currency of the world is largely based on its importance in energy and commodity markets. According to an exclusive report from the Wall Street Journal, Saudi Arabia and China are now discussing pricing some Saudi oil exports in the yuan. China is aggressively pushing to dethrone the dollar as the global reserve currency, and this latest development suggests the petrodollar is now being threatened. If we lose the dollar, the demand for dollars goes down dramatically. The demand for dollars, if they're not used for commodities, could be thrown to the wayside and come back to the United States, where we have massive inflation because the dollars are not needed overseas, which means they're going to come back here and buy all of our assets. A dollar is a future repayment. And when they come back home, they are going to create massive amounts of inflation as more dollars exist outside of the United States than inside the United States. At least that's what it's like 70% of the dollars do. If they come back, it's going to rise the price of everything. And here's one also with this. It says Russia's considering energy sales to friendly nations in Bitcoin. Looking at this is URNM versus oil, the oil price. You can see the correlation here. They are very highly correlated. Uranium might be just delaying behind oil, and we might see a very large run in uranium as it's highly correlated. All these are highly correlated. All these energy sources. We're seeing natural gas move higher in the United States. Uranium is a competitor fuel. So what we're going to see, I think, are more uranium, or I should say, more nuclear plants stay open longer, is my guess. And I think we've got some information on all this. So keep moving forward here. It says, yeehaw, bipartisan companion bill to ban uranium imports from Russia has been introduced by 2 Republicans and 2 Democrats following on Barraso's Senate bill launched on 17th of March. We've got here, let me say it loud and clear, carbon-free nuclear power is an absolutely critical part of our decarbonization equation, U.S. Secretary of Energy Granholm. And that's what we say here. Coming back, despite being one of the world's largest producers of uranium, Saskatchewan currently does not generate nuclear energy. Will be changed very shortly. Premier Moe is confident nuclear energy generation will be coming to Saskatchewan. So it looks like they're going to be adopting some nuclear energy. BNN just now saying environmental minister of Germany opened the door to keeping its remaining nuclear reactors running longer as they scramble for energy. I told you, when things get tight, they're gonna run these nuclear power plants longer, or they're gonna recommission them in some areas. Because when there's an energy shortage, you got to turn the energy back on. And if these already have sunk minerals and sunk energy already in the builds of these nuclear power plants, they're going to use them. They're going to use them. They got to find the fuel, though. And the fuel is going to go into a short squeeze, in my opinion. North Shore Global Uranium Mining ETF, URNM, on New York Stock Exchange is currently rebalancing its holdings with a 31 March target for completion. No index changes announced yet, but holdings data show 3 names will be added. They're going to add Alligator Energy, Baseload, and Elevate. That's pretty awesome if you're in those. And we're seeing strength in those names. Looking at uranium supply and demand imbalance is large enough to increase price significantly this year. This bill, however, would create historic moves, and they would happen overnight. Watch closely. That's his opinion on the banning of the uranium fuel. It says the Emirates Nuclear Energy Corporation said that Unit 2 of the Baraka nuclear energy plant is now operational, providing 1,400 megawatts to the UAE's national grid. So they're putting in nuclear power over there. They've got 2 of them. You can see one here and one over here. So they're expanding their nuclear capacity. We've got U.S. reaches liquefied natural gas deal with EU to reduce Europe's shortfall. So the U.S. will supply an additional 15 billion cubic meters of liquefied natural gas to the EU this year, Biden said. So it looks like the crisis in Europe and Asia with natural gas is going to impact the United States. Like I said, it's going to come here, and we are going to have far higher natural gas prices in, I think, the short term. It says April natural gas futures surge well beyond $5 threshold. Here it comes. We're gonna start shipping natural gas overseas, and then the price is gonna start tightening up here. Looking at the Elliott wave, natural gas is breaking bullish triangle. Here's the bullish triangle that we've got. We've seen it on our technical analysis on the channel, and it's moving on higher. So natural gas, I think, is an incredible opportunity. Looking at here, it says natural gas prices today: U.S. $5.50, EU 33.1 MMBTU, 6 times more expensive and likely to come down. So this will come down, and I think the U.S. will go up and will hit some sort of balance point between the two. It says the EU-German industrial base is at a high risk of becoming uncompetitive, as there is no obvious low-cost alternative to natural gas to generate high-temperature industrial heat. Art Berman saying there's no good reason for the rise in the U.S. natural gas price this week except drafting on oil and commodity price momentum. That's what his opinion is. So I'm trying to get people's opinion from positive and negative. I'm throwing all opinions out there, guys, so you can read them. Coming on over here, and I'm going to come back up. Lithium prices have nearly doubled in 2022 amid insane commodity rally. After more than quadrupling in value last year, lithium carbonate continues to soar in 2022. EV and new energy vehicle sales in the pivotal Chinese market jumped 158% to 3.5 million units in 2021. New lithium supply continues to trail demand forecasts for lithium. And it says during, so this is about food coming up. It says during a press conference in Brussels on Thursday, President Joe Biden admitted that food shortages are going to be real because that is the price of the sanctions that have been imposed on Russia over its invasion of Ukraine. With regards to food shortages, it's going to be real, Biden said. The price of the sanctions is not just imposed upon Russia, it's imposed upon an awful lot of countries as well, including European countries and our country as well. It says we're about to face massive energy and food shortages, and Biden's solution is to ban drilling and put expensive and inefficient solar panels and windmills on what's left of American farmland that hasn't been bought up by China or BlackRock. Well, that's his opinion, and there's a lot of merit to that opinion. Moving on over, it says oil price keeps rising and governments keep subsidizing. Problem with many governments is they talk about decarbonizing. But when prices send signals that should alter behavior, they try and prevent those signals from being effective. Addiction creates irrationality. So what he's saying is that when oil prices move way on up, giving a signal that we should be producing more oil, and that if the electrical economy or the electrical solutions, renewables, and all this other stuff, if they were viable, we should be running to those in mass. But what are we doing? We are basically running back to oil. And why is that? Do we need oil in order to survive? And that could be the case. We might get ourselves in an energy squeeze where oil squeezes up dramatically and that we have to continue to use it because that is the superior fuel in terms of energy return on energy invested. We've got down here, most U.S. gross natural gas withdrawals and production growth occurred in the Appalachia, Permian, and Haynesville regions in 2021. You can see this graph where the Appalachia, Southwestern Energy's up there. That's one of the investments that I have. Appalachia, the Permian's done very well. That's where SM Energy and all those other ones, CDEV, are at. Haynesville's done very well, and these other ones, they're doing okay. Scrolling over here, Art Berman. The U.S. has little ability to export additional liquefied natural gas in the near term. Flows to U.S. liquefied natural gas export facilities have been steady near full capacity. And this is the capacity. We're at full capacity. So he's seeing that even though Biden's saying, well, hey, we'll ship a whole bunch more liquefied natural gas, we're already at capacity. We're shipping about as much as we possibly can. So that's one thing I wanted to cover. That is kind of the summation of what I'm seeing for information from Twitter and articles on what's going on with the energy world. So we have, to sum this up, we have a potential squeeze in uranium that could be happening depending on what they determine with the sanctions against Russia. If we're not going to use Russian uranium, I don't know where it's going to come from then. And we could have a massive spike in uranium if that occurs. Looking at oil, oil's already getting squeezed. We're going higher. I think we can see that. The traders are seeing it, and they're bidding up oil that's later, the contracts later this year. So 6 months out, it's going way up. That's what we're seeing. Natural gas is breaking out of its pattern, going to the upside. Europe is dragging us higher. We are expecting to ship more natural gas over to them if the capacity can support it. And I don't know if it can. Looks like we're already maxing out what we can. But that capacity will continue to increase. We'll build more liquefied natural gas terminals. That's why we're in Tellurian. And that's what's happening is we're building more. We're gonna up our exports of natural gas. And that market is going to be tight. And I think U.S. natural gas prices will increase over time. So that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.